Hey guys, what's up? Welcome back to another video. In today's video, I'm going to be doing an analysis of the fourth quarter earnings results for Apple. And Apple actually reports their fourth quarter on September of 2022 instead of December. So this is the fiscal year end for Apple's 2022 fiscal year. And we can see that over the last year, Apple's stock has fallen 9% during the same period that the S&P 500 has fallen almost 20%. So Apple is outperforming the market over the 1-year chart. And over the 5-year chart, Apple is up about 200% in the same time period that the overall market is up about 45%. And so Apple's outperforming the market over the 1-year chart and the 5-year chart. And so in this video, I'm just going to look into a quick little article that I found comparing Apple to some of the other big tech companies in the market. Then I'm going to look into their fourth quarter and a little bit of their annual financial results to get a better understanding of their earnings growth over the last year. And then lastly, I'm going to end the video off by comparing them to some of their competitors from a financial ratio perspective, and then also figure out the intrinsic value per share of Apple to know if this is a good price to buy into the stock from a value investing perspective. So thanks in advance for leaving a like on this video. It really helps this channel grow a lot and get recommended to other people on YouTube. So thanks for that. And let's get right into it. So right here in this article, we can see it's titled Apple is now valued more than Alphabet, Amazon, and Meta combined. And Alphabet is the parent company of Google, for those of you who don't know. And so basically that's pretty huge that Apple is now more valuable than a few of the biggest companies in the world. And so we can see right here, they point out that at one point or another, Apple was valued at a market capitalization of about $2.307 trillion, while Alphabet, Amazon, and Meta combined added up to a market capitalization of about $2.306 trillion. And so obviously that puts Apple at an extremely high valuation and at a pretty big success story in comparison to their three competitors. We saw also, looking at some of the other stocks in the stock market, that Alphabet, Meta, and Amazon were all trading pretty low, especially Meta. If I look at that stock right now, we can see that over the last year, they're down about 70% and down about 42% over the last 5 years. So it makes sense that Apple would be worth more than these other three big tech companies combined, because they really haven't been performing that well in the market year to date. And so right here in Apple's financial statements for their fourth quarter and their annual results, as we can see right here, the 12 months ended for their fiscal year, we're looking at their income statement right here, and they're comparing their fourth quarter results from 2022 and 2021. And we can see that year over year, their net sales with their product revenues and their service revenues combined has increased about 8% from around $83.3 billion to $90.1 billion. So that's obviously a ton of revenue for Apple. And then year over year for their annual results, we can see that their revenues have increased about $365 billion to about $394 billion. So that's a ton of revenue for Apple. They're basically hitting record revenue levels and profit levels in 2022. So that's very impressive for them, especially considering the fact that when we looked at the financial statements of some of their competitors like Meta, as well as some other tech companies and companies trading right now, a lot of them reported declines in their revenue. So the fact that Apple was actually able to grow their business during a time period where a lot of consumers are holding back on their spending because of the overall market crash and the uncertainty about the economy right now is pretty impressive. And so right here for their net income, we can see that it's grown a little bit, not as much as their revenues, from about $20.5 billion to $20.7 billion. And then for their annual results, that's increased from about $94.6 billion to $99.8 billion worth of net income. And then so right here we can see their balance sheet, and we can see their total assets have increased year over year from $351 billion to $352 billion. And then also we can see that the vast majority of their business is financed by liabilities as opposed to equity. They currently have about $300 billion worth of total liabilities and about $50.6 billion of total shareholders' equity. And this line item has actually decreased year over year from $63 billion to $50.6 billion. And that's actually not a very good sign, because if we look at their shareholders' equity line items, we can see their retained earnings in 2021 is now an accumulated deficit. So they've basically gone into debt in their retained earnings line item at this point. And on top of that, we can see that they're trying to raise additional capital by bringing in new partners to the business and issuing new shares of their company in the amount of 57 billion to what is now 64.8 billion. And so if they're raising money by issuing new shares, then that's obviously going to dilute shareholders of Apple who were previously holding on to shares of their stock before this new share issuance occurred. And then lastly, right here, we can see obviously their accumulated other comprehensive income is now an $11.1 billion accumulated loss. And so lastly, right here for their cash flow statement, we can see they're just using their annual cash flows right here, comparing the 12 months ended September 2022 to September 2021. And we can see that year over year, their cash from operating activities has increased from about $104 billion to $122 billion. So that's actually more cash inflow from their operating activities than we saw net income in their business. So that's obviously pretty interesting. It means that they're collecting more cash from their operations this year, as well as some of the collections on their accounts receivables from last year, more so in 2022 than they did in 2021. And so obviously in investing activities, they've invested about $22.3 billion this year. And then in their financing activities, we can see that they return a good amount of value to their shareholders through repurchasing common stock and through dividends. They paid out dividends of about $14.8 billion this year, and they also repurchased about $89.4 billion worth of common stock this year. So definitely trying to return a lot of value to their shareholders here. And so now what I want to look at is this discounted cash flow model to figure out the intrinsic value per share for Apple. And Yahoo Finance is basically estimating that Apple is going to grow at a growth rate of about 8%, 8 to 9% for the next 5 years compounded annually. So I was conservative and I cut that value in half to 4% for the next 5 years after that. Looking for a return on our investment of about 10% here. They had about $111 billion of free cash flow in 2021. And then they have currently about a net debt position after subtracting their cash on their balance sheet of about $84 billion. And they have about 15.91 billion shares outstanding. And so based on that, the intrinsic value per share comes out to be about $98 per share, which compared to their current share price means that unfortunately, it looks like Apple might currently be trading above their intrinsic value per share, since they're currently trading at $136 per share, but their intrinsic value is said to be about $98 per share based on these projected growth rates. And so on the right-hand side here, I did a competitor analysis comparing them to some of the other big tech companies in the stock market right now, Microsoft, Google, Amazon, and Meta. And we can see that compared to the other big tech companies, it looks like Apple has one of the lower gross profit margins at about 43%. Meta has the highest at 80%. Microsoft with their 68% and Google with their 56% are all higher than Apple. Apple is only higher than Amazon's 42%. And then in terms of net profit margin, looks like they're right around the same level. They're pretty much only higher than Amazon. And then with return on assets, they actually have the highest efficiency in terms of getting a return on their business's assets here at about 28%, which is higher than all of their other competitors. Meta coming in second at 24%. So based on this competitor analysis, it looks like in comparison to the rest of the competitors in this industry, Apple could potentially, if they wanted to improve in terms of competition, try to improve on their profit margins here. But in terms of return on assets, they're obviously beating out the rest of the competition. So it looks like from a financial ratio perspective, they present a decent buying opportunity, but it looks like Meta with the highest profit margin, gross profit margin, and Microsoft with the highest net profit margin might be dominating the competitive scene in terms of financial ratios and industry analysis. And then obviously from an intrinsic value standpoint, it unfortunately looks like Apple might be trading above their intrinsic value per share at the moment if we were going to assume that these growth rates from Yahoo Finance were accurate. But I'd love to know what everyone watching this video thinks about Apple. Is it a good buying opportunity right now? And why is this stock performing so much better than all of the other big tech companies in the market right now? Let me know what you guys think in the comments section down below. I'd love to talk about it. leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.